Okay, thank you everyone so much for joining in. Today, we are going to go over all of the steps of buying your first home. So whether you're a first-time home buyer or maybe you haven't purchased a home for very long and you just need a refresher, this is a perfect recap for you.
Amazing. Okay, so a little bit about us. We are Team Apex. The team is comprised of myself. I'm Jesse Chidwick. Michelle Chidwick is my wife, my counterpart on the call. We also have Kate DeVore, Brad Beaumont, Kayla LeDrew. We have Nicole and Cassandra. They are our back end. Where we service is Dufferin County, so that's going to be Shelburne, Orangeville, Melanchthon, Mono, Amaranth. We also service Peel Region, which is going to be just south of us, also Halton, and we will go as far up as Grey County, which is north. So we are committed to a 5-star real estate experience. So whether that's buying, selling, investing, we are certainly happy to assist and make that dream of home ownership a reality.
Amazing. So yeah, like I said, we are going to go through the entire home purchasing process. So from getting pre-approved to what it looks to shop for a home, putting in an offer, what happens on closing day, and some first-time home buyer incentives. If you have questions at all during this presentation, raise your hand and we can unmute you and you can ask any questions that you might have.
Yeah, and I think just to touch on that, it may seem like a daunting experience and something that may seem unobtainable. What we're going to do here is just really break it down into simple steps so that we can start to kind of work through some of those hurdles that you may be experiencing and have that realization that getting into a home can be a lot easier than what people think.
Exactly. Does not have to be scary.
Okay, so the very first step, it get pre-approved. Now, the reason why we want to get pre-approved is a lot of times, in our experience, people will tend to want to get out there and shop before they can figure out what their budget is. And really, you're just setting yourself up for a pretty big letdown. I'll use an example, born and raised in Caledon. A lot of times, some of my friends or family members, hey, I grew up in Caledon, I want to stay close to home, which is a really good idea. You could probably trade up there, but then they figure out pretty quickly that that Caledon property that they want is just not within that price point. So you're setting yourself up just for a lot of heartache. Meeting with the bank or a mortgage broker, you're going to figure out what your budget is and where you should be looking. That's step number one.
Yeah, and I'm sure if you guys are starting the home buying process, you are keeping a very close eye on interest rates right now. So you likely would have seen that earlier today, we did have another interest rate decrease. Now this affects variable rates, not fixed rates. And this is something that your mortgage broker or bank will break down for you, what's best for your certain situations or what you're comfortable with. So we were not going to dive too much into that, but if you do need recommendations for someone to work with at the bank or mortgage broker, we work with some incredible ones. So just reach out and we're happy to connect you.
And also just touch base on the fact that if you get yourself pre-approved, that rate's going to be held, right?
Mhm.
So it's going to be held for, I believe it's what, 4 months?
Yeah, 120 days. So if you went out and tomorrow you got pre-approved, that rate, you lock it in for 4 months. So you can be shopping around, and in that meantime, if things do come down, like if rates do come down, you can obviously get the lower rate, but it is nice to lock something in, have that bit of peace of mind in case things do go up, you're locked in at that rate for at least that 120 days.
Perfect. Okay, understanding your needs. So this is another big one. Kind of just referencing, my Caledon counterpoint there with respects to 750,000. That's probably not going to, let's say, happen within Caledon. But where it could happen is in markets like Orangeville or Shelburne, so a little bit further north. Now, what happens sometimes is first-time home buyers, they get kind of caught up in the fact that it may not be their quote unquote dream home, but it's a start. It gets you into the market. I know we've seen a little bit of decline in our market since 2022, but how we got to look at the real estate market, it's like a yo-yo on an escalator. So although we might see some ups and downs along the way, for the most part, things are gradually increasing. So understanding that, and that maybe this isn't going to be our forever home, it's a great spot to start. Now, another thing that we like to do with our guys is, if it's an area that you're not exactly, familiar with, if we're out shopping and looking at 3, 4, 5 houses, hey, maybe pop into the grocery store, see what's going on within that community. Walmart, it's another great spot to go check out. See what's going on within that community, and can you envision yourself living there? Get a feel for it. It goes a long way with just feeling a little bit better about that purchase for that area that you're looking at.
Yeah, even doing things like practicing your commute to that area or spending the weekend in that neighborhood, maybe subdivision, see what the streets are like after school and after work. Those sorts of things will really help you narrow down the location that you actually want to be in and can be in.
Exactly. And then that brings us into the second point here, which it's going to be freehold ownership versus condo versus PODL. So PODL, what that stands for is parcel of tied land. Now, what I'll do is I'll break down each different category in layman's terms so it's easy for you. So freehold, that means you own the property. Exterior of the property, the roof, the windows, everything associated with that home, that's on you. You paid $750,000 in this hypothetical situation. If the shingles get blown off in a windstorm like we're dealing with today, that's home ownership. You're going to have to replace that. Now, in a condo, it's a little bit different, okay? Because at the end of the day, you're paying what's called common element fees. And usually what that means is, so this paint on the wall beside me, in condo ownership, you own that paint inwards. The condo board's probably going to be the drywall outwards. So for example, using that same analogy, if there's a windstorm that comes barreling through and all the shingles get blown off your condo townhouse, well, odds are that that's going to be taken care of by the condo board. The monthly maintenance fees are a little bit higher because everybody's collectively pooling their capital for these type of expenditures. But if something happens, that's not most likely going to be on you. Now, when we talk about PODL, parcel of tied land, what that usually means is that the municipality is not taking care of the inside of that particular subdivision. So for example, the roadways, not going to be taken care of. Garbage removal, not going to be taken care of. Even the parks, these are all things that everybody's chipping in collectively to get taken care of, but you will have ownership of the shingles, the windows, everything on the exterior. Michelle, am I missing anything to make that a little bit more clear?
No, and I think just determining, a lot of people do get confused. Townhouses can still have condo fees, or they can also be bottles. You can also have freehold townhouses. So I often find that townhouses is that confusing thing. When you are out shopping, that's something that we would point out to you and let you know those fees beforehand. But a townhouse or even a detached home can still be a PODL. Typically, you'll notice that these are smaller communities. They might have like a community center that has a meeting room in the little subdivision there, but we'll make sure to point those things out to you when we are shopping you around.
Yeah, and it's worth noting, like the monthly fees in a PODL community, they're never really going to be outrageous. I say that, but $127 is typically what things are going to be. You might see it a little bit higher, but if you're looking in the 300, 400, 500 plus range, you're going to want some more things included, right? So when you get into those condo townhouses, well, that's all those funds are eventually going to be allocated to potentially a new roof. So these are all things that we can certainly work through and break down, but that's just a quick overview of what those might be.
Okay, amazing. So a lot of people, the costs, and especially closing costs. So of course, the down payment is the big one. So in terms of what your minimum down payment is, so if you're looking $500,000 or less, it's 5% of that price. Between 500,000 and 1.5 million is 10% for that portion between 500 and 1.5. And then 1.5 and over, you have to put 20% down. So these numbers just recently changed over the last couple of months. But to kind of give you an exact example, again, sticking with the 750,000, if you were doing the minimum down payment, it would be 50,000. And if you're doing, say, 20% down, that's 150,000. Now, again, these are numbers that you're going to work through with your bank or mortgage broker to see financially what makes the most sense to you, but there are options there. Now, when it comes to the down payment, that money is due on closing. So you'll meet with the bank closer to closing date, and that's when you need to have that down payment available. Some other costs that you'll also have to cover on closing is if you're going with maybe not a traditional lender or bank, you may have some loan administration fees there. Also, mortgage insurance. So if you are putting less than 20% down, you do have to pay CMHC insurance. So for instance, on a $750,000 purchase, if you're putting the minimum down payment down, your CMHC is $28,000. Now, that's not something you pay out right now. That's incorporated into your overall mortgage over the duration of time. Some other smaller fees would be your title insurance. Legal fees to a lawyer are typically between $1,000 and $1,500, and any prorated amounts that the seller has already paid. For instance, if the seller has paid their taxes for all of 2025 and you're moving in June, lawyers will prorate that amount from June to December that you'll have to reimburse the seller for. The very big, other than down payment, closing cost expense would be land transfer tax. Now, land transfer tax is dependent on area and purchase price. So again, I'm going to stick with the $750,000 example. Your land transfer tax on that would be $11,475,000. If you are purchasing in Toronto, that number is doubled. Anywhere else, it is not, but City of Toronto, they're doubling that. So that's, again, something big to consider with your closing costs. And again, when you sit down with your mortgage broker or bank, they are going to go through all of these costs with you to make sure that you have these funds on closing and that you're comfortable with all of these fees. And then again, things to consider is your moving costs, settling in, changing locks, and any renovations you might be doing to the property.
All that fun stuff.
Yeah.
Okay, so letting the search begin. Okay, so what we do with Team Apex, when we sit down with buyers who, again, they put their hand up, they're ready to get out there and transact. We've connected them with a mortgage broker, they met with their bank and they say, hey, here's what we're looking at. What we do is we start with the end in mind. Obviously, the end goal is to get you guys into a property. So what we do is we'll sit down, at a coffee setting somewhere where, where we can certainly be relaxed. Because again, it can be an overwhelming, a lot of emotions. And we'll just take out our computer and we'll say, hey, let's use that example that Michelle's been using, 750,000. Pull up the last 30 days of transactions. So let's say they say, hey, Jesse, I want to buy in Caledon. All right, let's pull up what's sold in Caledon, 750 or less. Maybe it's one property and they're looking at me saying, I wouldn't buy that property with anybody's money. This thing's in awful shape. Okay, no sweat. Let's see what's available in Orangeville. Now all of a sudden, the data pool is going to be a little bit different. Okay, there's going to be some options out there. We'll click through there. Would any of these properties be something that you would consider? If the answer is yes, and it's been a transaction within the last 30 days, there's good reason that there's going to be some more deals like that coming up, especially in a market that we're in right now where we're not seeing big spikes month over month. Okay, so once we can establish some areas where there's actually transactions happening that will hit your boxes in terms of your wish list, let's get out there and start actively looking. Okay, and again, the beauty thing about residential real estate is you can see it, you can touch it, you can feel it, you can go out there. Hey, is this a community that I'd like to live in? You look at the house, you like it, not ready to maybe put an offer in. Maybe it sells the next week and you see where that house sold for, and like, hey, you know what? I'm looking in the right spot. So that's where we like to start so that we're not really wasting anybody's time. Because if you say, hey, I want to buy in Caledon and 750 is where I want to be, might be spending the whole year looking at something that's never going to actually come to fruition. So that's where we like to start, and we like to just kind of set up some areas where these pockets are of interest to you so we know, hey, we've hit the right spot. Another thing that we also like to do is take, for example, Dufferin County. We've only got about a third of the inventory. This is primarily more Shelburne. Third of the inventory that's going to move. So if there was 100 houses on the market, 33 are going to sell, 66 aren't. So that means they're going to terminate, they're going to expire, they're going to come off the market. Now, what that means for us is there's going to be a lot of people that put their hand up, said, hey, I tried to sell, 2 or 3 months ago, but now is just not the right time. Nobody's transacting. Well, guess what? We like to find those opportunities for our guys where hey, maybe they don't need to go back to the MLS because we just played matchmaker. You're looking for a property, previously was up on the market, let's say 2-3 months ago. Let's get us in there without having to potentially compete. So that's a service that we also like to offer for our guys.
Yeah, so like Jesse mentioned, like we would put you on that traditional search when every single morning you would get an email, you'd be notified of what properties within your criteria has hit the market. But again, if you have a specific neighborhood in mind, we will knock on those doors and find you that home. Also, like Jesse was saying, the market is very different now than it was 2, 3, 4 years ago when you were competing and you had to make a decision within an hour whether you wanted a house or not. Right now is generally in Ontario a buyer's market, which means you have the opportunity to see a house once, take the night to think about it, maybe go back and look at it again, make sure that you have all your conditions and you're comfortable moving forward with the search or with the property, sorry. So now more than ever is a great time for buyers. If we were talking and having this conversation during the COVID times, we would have to say you are putting in a firm offer within an hour of seeing it, and you're probably competing against 10 to 15 other people. So buying your first home and in that situation is extremely overwhelming. So luckily for now, the market has cooled down. It's a lot more stable. So there's definitely a lot more opportunity for buyers to kind of sit down and make sure that they're making the right decisions and choices.
Absolutely. You don't have to do the offer right on the roof of somebody's car.
Mhm. Okay, so now we're going to dive into the actual offer. So, worst thing to do is the very first time you're putting in an offer is to actually look at the paperwork. It's all in legal jargon and can be extremely overwhelming. So, everyone on this call, we're going to send you a copy of a blank offer that's broken down into layman's terms, so everyday language, so that when you are putting an offer in, you actually know what you're signing and all the details of it. So obviously we're going to see a property. You decide that this is the one that you want to move forward with, and it's very exciting. We'll chat to you about price, terms, conditions. We'll prepare that offer with you and go over it with you. Typically, we'll do everything through electronic signatures, and then we'll send it off to the seller's agent, where they'll go over it with the sellers. So after that, there's one of 3 options. They could accept your offer right away, very exciting. They could reject it. It's not very common that that's going to happen, but it's an option. Or they will sign it back to you. So which means they'll make changes to it. They might change the price or the closing date, and then it comes back to you to either accept or make further changes. And this is where that back and forth negotiation comes from. So again, we'll send off that blank offer to you guys, but I'll go through kind of some of the meat and potatoes of it right now. So obviously, purchase price, it's going to depend on a lot of things regarding negotiation and the budget that your mortgage broker has approved you for. Deposit. So deposit is different from down payment. Deposit is something that if your offer is accepted today, that deposit needs to be in the other brokerage's account within 24 hours. So you would go to your bank and get a bank draft or do a wire transfer. So the deposit is a portion of your down payment at the end of the day. There's no set amount. A lot of times it's determined on purchase price. So again, let's use a $750,000 analogy. A deposit there, a healthy deposit would be say between $20,000 and $25,000. Again, it's not a hard set rule, but the more money that you're putting a deposit on, the more serious of a buyer you look like. For instance, if you were to get an offer on your home and the deposit was for $500 versus another offer where their deposit is $1,500, or sorry, 15,000, that buyer is going to look a lot more serious than you. That deposit is held in a trust account until closing and is then applied to the purchase price. If, for instance, during your conditional period, your financing doesn't come back or you do the home inspection and you're not happy with it, you get that deposit back during that conditional period. The times that you run the risk of losing your deposit, very rare that this happens, but we still want to touch on it, is if a week or two before closing, you, for instance, got cold feet for some reason and you wanted to back out of the property, that seller has the right to keep that deposit and go through further legal troubles, which we don't want to go down that road. But again, we still want to bring it to your guys' attention.
And it's
Right
usually
under
not
the
just the deposit that you're gonna lose, right?
Yeah,
So we
it's
just
a big legal problem. So we try to do everything to avoid that happening, which is why we make sure that your financing is really set in stone before waiving any of the conditions. Right under the deposit, you'll see irrevocability. And what that means is how good your offer is good until a certain time. So if you put an offer today, you might give the sellers until tomorrow at noon to respond. If the sellers do not respond between now and noon tomorrow, the offer is null and void. So they have between that time to respond. Typically, chattels is what's included in a property. So you will have typically, unless the seller states otherwise, all of your kitchen appliances, your washer, your dryer, your light fixtures, any mirrors that are fixed to the property. And then under that, you'll have fixtures excluded. So if there's a deep freezer, for instance, that the seller really wants to keep, those things are depicted there. Jesse likes to use the analogy, if you were to flip a house upside down and shake it, anything that is still stuck to the house is what is supposed to stay with the house.
would be fixed to the property.
Yes. And then you have rental items. So these are typically your hot water tank and water softener. Those are your 90% of the time, you're going to have those as rental products in a house. And the price ranges depend between those. Typically, it's about $30 per month for each. And those are very normal. And that is transferred from the seller to the buyer on closing. Other things that can be rentals are furnaces, air conditioning units. So that's something that we want to, again, budget for. The furnace and AC rentals can be a little bit more costly. So we definitely want to know those numbers and make sure that you guys are comfortable with them before moving forward with any property.
Okay, so the conditional period. So what we'll do is we'll use the townhouse for example. So typically what you're going to see in conditions for a townhouse is going to be home inspection, finance condition. The only time you'll have insurance, but it's not really going to be too practical of a condition. So for example, let's say your offer is accepted, you put in your deposit. Using Michelle's analogy, let's say it's 25,000. We now have, on average, 5 business days for financing and home inspection. So during that time, Your realtors, depending on who you guys decide to use, is going to send the agreement of purchase and sale along with the MLS data sheet to your mortgage broker or the bank. That's basically all that's going to happen from the real estate standpoint. They're then going to order what's called an appraisal. Hopefully that happens within the conditional period. Sometimes it does, sometimes it doesn't. Just really going to depend, right? If it's a rural property, you're going to want to wait till you get that appraisal because sometimes the numbers can vary. But again, you're going to have around 5 business days. Can be a little bit longer for that. Home inspection. Again, it's going to happen within that 5 business day period. What we like to do is we like to try and get our guys in on that home inspection, usually on the 3rd business day. By then, your bank should already kind of give you an indication as to where things look from your financing. But they'll go in, the inspector's going to do the report on the property. Again, their job is in that title, home inspector. They're going to find out what's going on underneath the property. They're going to lift up the hood, see what's going on, and then from there determine, hey, is this something that you guys are willing to accept? If it's not, should we ask sellers to remediate some of these issues, fix them, or should we quantify the problems and ask for a price adjustment? Not everything's going to potentially get done, but at least now we know we're going in eyes wide open as to what's going on with the property. And if for any of these reasons, let's say the bank says, no, you guys don't approve for what that purchase price is, or if the home inspection, if one of the footings is sinking and the property is eventually going to fall in 2 or 3 years, you can walk away from the transaction getting your deposit back in full. So that's what that looks like from that particular standpoint. Some other things that we can touch on, we have status review. So just like we mentioned earlier with condos and parcels of tied land, what they're going to have is called a, it's going to be like a reserve, right? So those monthly fees that you're contributing to each month, you want to make sure that the condo board has a healthy reserve of funds so that, in that example I used earlier, if the roof falls off or blows off with the condo townhouse, is there an adequate amount of money within that reserve to replace it? Because if there isn't, then what happens is the condo board goes back to all the owners and say, guys, the roof just blew off. We're all devastated just like you are, but we all have to figure this out and pony up and put some funds together to replace it. Or the other alternative is they're going to go get a loan from some other third-party banker, and then the fees are going to be adjusted, obviously, to make sure that that balance is covered. Okay, and due diligence, what this one could be, again, if you're looking, let's say downtown Orangeville, there's a lot of laneway housings. A lot of them are in really rough shape, but can you potentially turn this into a garage? Can you turn this into an accessory unit? These are all things that you want to have a little bit of time to connect with the town to see if what you envision and doing for this particular property is actually going to get permitted and you're allowed to build.
Yeah, and I also think something important to touch on regarding financing condition in particular. We kind of started off this talk talking about getting your pre-approval. So something I just wanted to point out, the difference between a pre-approval and actually getting approved. So you'll have your pre-approval, which is based on certain numbers, but you can't get your actual approval from the bank until you have an accepted agreement. So that is still why we asked for those 5 days, that we would then send the accepted agreement to your mortgage broker or bank, and they would finalize the numbers with the specific taxes, with the specific purchase price, and make sure that the lender is satisfied with anything. And then you get your official approval during that time. So that's the difference between a pre-approval and actually getting approved for a specific property.
And just on that note as well, so you've been pre-approved for 750,000. You've gone out, you found a townhouse, you put an offer together for 750,000, but the last 4 sales in that in that townhouse subdivision, they went anywhere between 500 to 550. Yeah, the appraisal is going to come in very, very light, and the bank won't lend you that 750 because the property is not worth that. Okay,
Mhm.
so again, these are all things that we want to factor in, and just make sure you're working with a real estate professional who is going to get these conditions in your offer. We're certainly not in a market where conditions need to drop out. Just added protection to make sure that obviously you're going to be able to close on this transaction on the date that's in the agreement of purchase and sale.
Yeah, these conditions are in here for your protection. And I know we had a question come in from someone prior regarding specifically home inspections and whether they're actually worth it. So
Yeah.
your home inspection is typically going to cost you between $300 and $500 depending on who you use. And it is 100% worth that money. When we're looking at a property, we can see certain things that are on the surface, but the home inspector, like Jesse said, is going to actually like open things up. They're going to get into the attic. They're going to use their infrared tools to see if there's any moisture behind the walls, things that we cannot see. And again, there's going to be issues with every single house. Even a new built house is going to have its quirks, but these things are preparing you. So if they tell you like, okay, this furnace, it's working right now, but it's older, and you're probably going to have to replace it in 5 years. At least that's something now in your head that you can budget for. It's not a make or break thing, but it's something that you know, okay, next 5 years, we'll probably need a furnace. We should budget that down the road for this. So not only does it make you comfortable with knowing the shape of the house right now, but it also prepares you over the next 5, 10 years to set up a list of things that you're going to have to eventually do to the home.
Yeah, you're going to get an overview. And again, what we always ask our home inspectors, what's some costs that are going to be incurred 1, 3, 5, 10, 20 years from now?
Mhm. Okay, so very exciting. You have found the house, you have done the home inspection, you've reviewed the status certificate, everything's all good, and you've officially firmed up on the property. So during this process, we send everything to your lawyer and mortgage broker so they have all the paperwork that they need to have on their end. So between putting the offer in and it getting accepted and between closing date, there's a little bit of a lull. You go through this really exciting period and then it's pretty slow. So what we include in all of our offers, first and foremost, is that you can revisit the property typically 1 to 2 times before you actually get the keys. So during this time, you can bring some friends and family to check out the house, bring your measuring tape so you can plan what furniture you're bringing in, all that sort of stuff. But we typically save that second visit to a couple of days before closing. And the reason that we do this is we want to make sure that everything that was included in our offer, the fridge, the stove, washer, dryer, is all still there, and that nothing has been damaged maybe when the sellers were moving out or anything has come up, any issues. If, for instance, we go through the property a couple of days before closing and we run the dishwasher and it's leaking everywhere and it was not leaking during our home inspection, this is a time that we can notify the sellers and the lawyers so that we can come to a resolution before closing. If you find out that there's any issues in your home a week after you've moved in, it's a lot harder to get the seller to give you any funds back or fix anything. So in the case of the dishwasher, if it is leaking everywhere, we would ensure that the sellers are compensating you for that or putting in a new dishwasher, fixing the dishwasher, making sure that that is functioning on closing date for you. So we want to ensure when you get the keys, you're not coming across any of these problems, that you can actually move in and fully enjoy the property right away. So when it comes to signing everything at the lawyers, we typically do this a week or two before closing date. So when you meet with your lawyer, you're going to bring your big check with your deposit that covers the rest of your down payment and closing costs. You'll also want to bring your proof of property insurance. So this is something that you'll do and prepare during this period of the accepted offer and closing. You'll want to make sure all the utilities and rentals are in your name, and you'll provide all of that to your lawyer, and you'll sign a lot more paperwork at the lawyer's office. Now, on closing day, you do not get the keys to your property like 8 a.m. that morning. I know a lot of people do think it's that way. Typically, you'll get the keys later in the afternoon. So once your bank has transferred all of the funds into the seller's lawyer account and the names are transferred on title, that's when you get the keys to the property. Now, this typically does, like I said, happen in the afternoon, but in the fine print of an offer, it says 6 p.m. So technically speaking, the sellers do not need to be moved out of the property until 6 p.m. on closing day.
Just be mindful of that because it's a very, very small percentage of times, but it has happened where you and your buddies got the U-Haul queued up and ready, and the people moving out of your new home are still there until 6 p.m. Because again, we can't control what the other side does, unfortunately. But I'd say even less than 5% of the time that happens. Just food for thought.
Yeah, for sure. So at that time, once your name is actually transferred, the lawyer will give you a call. They'll let you know the code to the lockbox so you can get the keys. And we always suggest, again, do another walkthrough of the house, run all the appliances again, make sure everything that was supposed to be sticking with the house is there. Again, if there's any issues at that time, you let your realtor and your lawyer know so that we can get on that right away. Now, I know this whole thing is based on first-time homebuyers, so we want to go a little bit more into some of the incentives that are offered to first-time homebuyers. So first and foremost, land transfer tax. So as I mentioned, that is one, aside from your down payment, it's one of the biggest closing costs. So reverting back, if you're purchasing at $750,000 outside of Toronto, that's about $11,500. So if you are a first-time home buyer, Ontario will give you a $4,000 tax rebate on this. Now, it's important to note that if, for instance, you're a single person and your dad is coming on title with you in order to reach your financing goals or whatnot, if they have purchased a property before, that is going to impact the amount of rebate that you get. So for instance, if I was a first-time home buyer and I was to purchase a home with my dad who has purchased a home before, that rebate of $4,000 is now actually $2,000. So that's just something to keep in mind. A lot of times first-time home buyers will have co-signers or have mom and dad help them. That's just something to keep in mind. Also, the home buyer's plan. So this allows you to withdraw up to $35,000 each. So if you're a couple, that's $70,000 from your RRSP, and this is tax-free, and you don't need to pay this back for 15 years, starting 2 years after you've pulled that money out. So that helps a lot of people with their down payment because not everyone has $75,000, for instance, sitting in their bank accounts. There's also a first-time homebuyer's tax credit. So this is something that you'll get back when you do your taxes that year, but that's $1,500. There is also the new home savings account. This is very similar to the home buyer's plan, but you can contribute up to $8,000 a year to this account, up to $40,000. These are tax deductible, and this is used when you are purchasing a home. So again, another avenue for you to help save for that down payment, because we know that that is a big hurdle for a lot of first-time home buyers. Just announced a couple of months ago, first-time home buyers and those purchasing new homes can now get a 30-year amortization if you have an uninsured mortgage. So an uninsured mortgage is when you're putting less than 20% down, like I mentioned, that CMHC insurance that you would have to pay. So you can extend the life of your mortgage to 30 years. Typically, it's 25 years. So this is giving you another 5 years to pay off that mortgage, which is going to reduce your monthly mortgage payments. So if you're someone or a couple who's extremely budget conscious and you're wanting to make sure that you're only spending all in, say, $3,000 a month on your mortgage and your utilities and taxes, this is going to really help you budget those numbers a little bit more. Now, it's
Yeah.
important to note because you are extending the life of your mortgage, you will be paying more principal over time. But again, these are options to use in order to make you get that step into home ownership.
Correct. Yeah. The interest accumulated over that 5 year period, it will be more. But again, when it comes down to your actual payment, it's not going, it's going to make the monthly payment lower. Now, just even on this note as well, because this ties in nicely, when you're going back and forth with respects to negotiations, what we have to kind of think of here is let's use the analogy of 750,000, right? That's the number that we want to land at. If hypothetically, we're submitting an offer at 745 and the seller comes back where their bottom line is 755 and we're splitting the difference meeting in the middle, although that $5,000 may seem like, hey, that's a significant amount of money, when we take $5,000 and we're blending that over a 30-year term, really what it comes down to monthly, guys, is it's not a whole heck of a lot of money. So this is where when you're working with your realtor along with your mortgage broker, make sure just, hey, what are the numbers going to look like, right? Hey, if I got to get to 7, even 55 to get this particular property done, what's the difference between payment of 750 and 755 monthly? You'll be shocked at how minimal that is. And if that's the number that gets you guys into the house, hey, that might need to be what you got to do.
Yeah, and kind of again, on the same track that Jesse's going on here. When you do get that approval from the bank, if it's 750, they're gonna break down, okay, this is your interest rate, this is gonna be your monthly mortgage, and they'll say, on average, here's your utilities. You can determine if that amount per month, if you're comfortable with that. Just because you're approved for 750, you also don't need to spend 750,000 if you're not comfortable with those mortgage payments. At the end of the day, you want to make sure that you're not jumping into a house and being house poor and making it a struggle each month. You want to make sure that you're actually comfortable with making those payments each month. And speaking to one of our financial advisors who's great, he talks about practicing those mortgage payments. So whether you are renting right now or maybe you're at home with mom and dad still, if you get that approval or you kind of know what you'd be comfortable with, set aside that money each month. Not only is that going to help you save a little bit more for your down payment, it's also going to put you in that reality of that's what you're going to be having to pay each month. So if you're practicing this for a few months, when your mortgage payments actually start, it's not going to be such a shock to you.
Mm-hmm.
And last incentive, there's a lot of local down payment assistant programs depending on what city or county that you're purchasing in. They're typically interest-free loans or second mortgages that help you obtain the rest of that down payment. Each county is going to have different criteria. For instance, Dufferin County has one, Gray County has one, and you don't need to pay that loan back until you actually sell the house. I would typically say that if you don't need to use these programs, don't use them, but it gives a lot of people who are struggling to get that down payment and really want to make that leap into home ownership a reality.
Absolutely, yeah.
So I think that's all that we have for our slides. So I'm just going to stop sharing here. But if anybody has any questions, feel free to raise your hand and I can definitely answer them for you. In the meantime, a couple of questions that people asked that weren't able to tune in, how to find the right agent to work with and the steps on working with someone who really does understand what you need. Jesse, do you want to take this one?
Well, this is a great question. Obviously, with us having our conversation geared towards first-time home buyers, there has to be a level of comfortability, right? It's got to be somebody that you're not afraid to ask questions. No question is a bad question. You don't know what you don't know. I can keep giving more cliche buzzwords, but I think at the end of the day, it's got to be somebody that you're going to know, like, and trust, who's going to level with you and let you know, hey, maybe this isn't a good purchase for you, Or, hey, maybe this is a good buy. Maybe this is something that you should be interested in. They've got to have your interest above their own and are going to act in a manner that's going to obviously put you ahead of themselves. So to me, I think that's going to be number one. What happens, I think, a lot in our space is people will use someone that maybe their parents use, a friend or family, and maybe they don't have that type of relationship where they're just not asking them the right questions because they don't feel comfortable. Because at the end of the day, yeah, it's a big decision, and you got to make sure whoever's representing you is putting you ahead of themselves.
Yeah, and to kind of extend on that, I might get these numbers a little bit wrong, but recently something came out that 75% of realtors did not do a single deal last year. So like Jesse said, if your uncle or aunt or cousin has their license, you want to make sure at the end of the day that you're working with someone who's educated on the market, who actually knows what's going on in today's market. It's really important and will likely save you a lot of money down the line to make sure that you're working with someone who does have your best interest and who knows the market really well.
Yeah, absolutely.
The next question was minimum financial requirements besides just the down payment. So I think we kind of went over that regarding land transfer tax, deposits, and lawyer fees. I think we kind of recapped all of those. But if there's anything, Jesse, you think I missed,
No,
definitely
I,
chime.
I think we touched on a lot of the key things there, but like we said at the very beginning of the call, like that first person you're going to connect with, reach out to your bank, reach out to your mortgage broker, even if even if you have $100 in your bank account, you know, it's going to help you start to prepare by getting your ducks in a row, right? So you're never too early to reach out to a mortgage broker or even a real estate agent like ourselves and putting a game plan together. A lot of our time is spent, putting strategies and plans together for people who may not transact for another 2 or 3 years. But when that 2 and 3 years comes, they're ready to go.
Yeah, exactly. And like to kind of extend on that regarding what you're actually looking for, once you actually start looking at properties, you might realize things that you want or don't need in a home, and we can always adjust your search and your criteria based on that. It's really once you start looking at properties, you really start to think like, okay, maybe I really don't need XYZ in a house, or maybe I really don't need to live in this particular city, for instance.
Absolutely.
And then the last one here is it even worth buying a 3-bedroom home if I know I want to have a big family? I think, again, this kind of goes on to what we were talking about, is your first home is likely not going to be your dream home. We would all like to move into our dream home at the very beginning. And if you can, that is fantastic. But it's not the case for a lot of people. It's what we refer to as climbing the real estate ladder. So if you're in that maybe 2-bedroom condo to start, there's nothing wrong with that, because in the next 5 years, you're going to build equity and the price of that house is going to go up. And then you can kind of move up to that townhouse and then move up to that detached and then move up to XYZ, whatever you're looking to get. So I would say definitely be flexible on your criteria and your wants and needs, especially when you're a first-time home buyer.
Let's in here numbers wise. Let's just go through it. We've been using that magic number 750,000. Okay, so
Mhm.
750,000. Okay, on average, your real estate market's going to increase 5%. Okay, so 750 to see the return at 5%. That's 37,500. So what
Mhm.
that means is that property is going to be worth 700 and what 87,500
Yep.
at next year.
Yeah.
But then we're also compounding, so it's going to be 5% the following year, and so on and so forth. So a lot of the questions that we ask our guys is, yes, I get that you want that 4-bedroom house, but how long do you think you're going to be in this 3-bedroom home for? Is it 2 years, 3 years, 5 years? Then we start to show them the numbers. Historically, real estate, it's just, yes, we're on a little bit of a pullback right now, which for you guys as buyers, what a great time to strike. because you're not buying up here. Okay, we're kind of leveling off. Start to ride that wave of appreciation so that when it's time for that fourth bedroom, you've now seen a return on equity on your actual purchase and you can trade up in real estate. So obviously, we're realtors, so we can talk to these numbers relatively confidently, but appreciate everybody. Is there any other questions?
I don't think we have any other questions on right now.
Okay, well then what we will do on our end is we will send out that layman's term agreement of purchase and sale.
Mhm.
You're looking for some reading material before you go to bed. It's going to be a lot better than the actual APS. So, flip through it. Like Michelle said, it's a lot better to go through that one than the actual one so that when you're signing that offer for the first time, it's not overwhelming. And we will send everybody this link. So if you have any friends or family that you think might benefit from this, please pass it along. Happy to field any questions. Myself, Michelle, Kate, Brad, Kayla, more than happy to help and start your real estate journey.
Yeah, we'll send out these slides as well that we went through, so you with a little bit more detail in them, so you can kind of read them at your leisure as well. And if you ever want to sit down and chat with anyone on the team regarding what your wants, needs are going to be, go through that list of properties that Jesse was mentioning that are in your criteria in your budget to see if you would purchase any of these properties. We're happy to sit down and have a coffee with you and chat about any of these things.
Thanks.
All right, thank you so much for tuning in.